Hello, welcome to the weekly technical analysis review for Monday, June the 3rd. I'm Rafi Bajajan at XM.com, and today we're going to be looking at the dollar yen, the euro pound, and the USDCAD. Starting first with the dollar yen pair, we can see that the momentum indicators are pointing to negative bias in the short term. The RSI is just below the 30 level, and stochastics are hovering near the oversold area. Looking at the medium-term picture, it is also looking somewhat bearish as well. There is immediate support coming from the 161.8% Fibonacci extension of the up leg from 109.70 to 112.39. Earlier today it made the 4.5 months low, 108.06. So if that support is breached, we could see the 107 handle being the next aim for the bears, which is the 200% Fibonacci extension, and then further down we've got the 261.8% Fibonacci extension at 105.35. If though we do see a bit of a rebound, then we could see resistance coming from the 138.2% Fibonacci at 108.67. Above that we've got 109.70 as the next potential resistance. But in order for the pair to restore its neutral outlook, we would need to see dollar yen head back towards the 50-day moving average, that's around 110.73, also the 61.8% Fibonacci, and also the 200-day moving average near 111.37, that's the 38.2% Fibonacci. Let's now turn to the euro pound pair. We can see it's looking fairly bullish for the pair in the short term. RSI is though clearly in overbought territory. We could then see a near-term downside correction soon. That's not looking quite likely just yet, though. Prices continue to head higher today. Last week we saw the pair making a 4-month high of 0.8872. That was also the 200% Fibonacci extension of the downleg from 0.8681 to 0.8490. So if that resistance level is broken, we could then see potential targets first at the 0.8930 that happened to be a strong support and resistance area back in late 2018 to early 2019, and then we've got the 261.8% Fibonacci extension at 0.8990. But if we do see a downside correction, we do have immediate support at the red Tenkan Sen line. Then we've got the 0.88 handle at the 161.8% Fibonacci extension as another key support level. And then we've got the 138.2% Fibonacci at 0.8754. Breaking below the 138.2% Fibonacci would weaken the positive momentum, and we could see prices declining towards the 50-day moving average at 0.8660, and then head back towards the Ichimoku cloud, and that would turn the short-term picture back to a neutral one. In the medium term, though, it's too early to say that we've got a bullish outlook. We still haven't had the bullish crossover between the 50 and 200-day moving averages. So until we've got that confirmation, traders should be cautious about pricing in a new uptrend. And finally, for today, we've got USD versus the Canadian dollar. It's looking rather neutral at the moment. We're seeing some weakening of the positive momentum we saw over the past week or so. We've got immediate resistance at last week's 5-month high of 1.3564. If that resistance is broken, the next target would be 138.2% Fibonacci extension of the down leg from 1.3520 to 1.3357. So that's at 1.3583. Above that, we've got more Fibonacci levels, 1.3621 and 1.3684, that traders should watch out for if we do see more advances in the pair. But if we do see the positive momentum weaken further, we're likely to see support coming at 1.3485. That's a 78.6% Fibonacci. And then we've got 61.8% and 50% Fibonacci levels at 1.3458, 1.3438 before prices head towards the 50-day moving average at 1.3419. If we do see prices breaching below the 50-day moving average, that would erase the positive momentum and would shift the risks back to the downside, with the key support being May's low of 1.3357. In the medium term, we do have a slight bullish outlook, and that looks set to continue for a while longer. So that's it for me. Thank you very much for watching, and have a great day.